Hey guys, welcome to the Closing Beat. Happy Tuesday. Hope you're having a great day here so far. This is our Closing Beat show. We're financial advisors here at Jazz Wealth. It's just a quick class that we do to go over the stock markets, the good, the bad, and the ugly. And we got some ugly to cover here today, so we'll get right into it. If you're one of our customers, this Thursday, our Wine and Wealth class is going to be on market analysis. How do we kind of go through so many different things? How can we quickly go through the markets and understand where it's at so that if you guys are keeping track there, you'll be able to do the same. If you look on the right-hand side of the screen, you got the Dow lower by 472. It was actually lower by 644. 48, somewhere in there at one point. Big down day, over 2.2%. But right at the last minute, you can actually see it on the chart to the bottom right-hand side of your screen. The S&P, the last few minutes, got a little bit of buying in there. Those are your big money guys that realized that was a discount, at least relative to the day, and a little bit of buying at the end of the day. So the Dow only closed lower by 472. Every Dow stock was lower today, by the way. You had the S&P lower by 48 and the Nasdaq lower by 196. Let's go over to the charts real quick here and take a look. You can see on this top hand screen, I'm in the dojo, by the way. This is available for all of our customers. You have your own little custom portal there where you can follow along with us if you like. The S&P 500 back down to the 50-day moving average. Still very much in an uptrend, not really that big of a deal, but kind of the comments we had yesterday that if we did pull back, looked like 2,800 would be the magic number, at least as far as first support. Well, that puts you about here on the 280 if you're looking at the SPY as an ETF to track that. You can see the Nasdaq, same thing, pulling back today, more of the trade news. I mean, really today was just trade news. But still very much in an uptrend, just pulling back. Go back to last 2 weeks, we were talking about the noise at the highs, that sort of back and forth, people looking for a reason to buy, weren't getting the reason to buy. And if you don't have a reason to buy, and well, President Trump gives you a reason to sell, but people are going to sell, right? So you got that pressure here in the short term. Russell 2000 was your biggest loser of the day. That's a stupid index. This thing, it looks like a Christmas tree, doesn't it? We used to, as traders, we used to call it a Christmas tree where it's like red, green, red, green, red, red, green, green, red, red. So you get the idea. The Russell 2000 continuing to be weak there on the day. If you look at the S&P 500, you had 92% of the entire S&P 500 was lower on the day. Broad-based sell-off. That lets you know that it doesn't really, yesterday was the semiconductors, a little retail in there that were exposed to China. Today is basically all of it. Why would the whole market sell off if we're all focused on imports from China and those potential tariffs? Well, if we do go to 25% in terms of tariffs, and President Trump does put tariffs on the remaining goods that come out of China, what that means is just slower global growth, slower GDP growth here, and just generally slower growth at a time where we're already kind of hinting at slower growth. And so basically, investors go, okay, well then we need to reset, right? I'm not going to pay this valuation for the market. I'm willing to pay something a little bit lower. And so that's where we're at, basically. It proves also that the markets had priced in a deal. Most people were expecting a trade deal, rightfully so. I mean, every day they were saying, hey, trade deal's going well, trade's going well, trade's going well. And then boom, why would we walk away and make a big deal out of this if everything was going well? So that's what you got there. If we go back over to the charts, you look at China. China absolutely just falling apart here. Back to correction territory. This is the CNY, if you want to take a look at that. Down another 4% today. It was limit down yesterday. A lot of stocks over in China limit down there. So it's one ETF you can use to just kind of keep an eye on the A shares over in China. A lot of people like to use FXI. You're looking at the same picture there. It's back to the 200-day moving average. Look at a whole year's worth of rallies, and China's already erased almost half of it. So you're very close to a 10% pullback here in the FXI. If I could point out a few other things before we get rolling here. I don't know, do I have that data? Yeah, here's the VIX. So volatility, I mentioned this last week, that investors were the most long volatility. I went through the whole thing with our customers to kind of explain last Thursday's class that there were more people long the VIX than any other time in history, going back to the Great Recession there, the financial collapse there, 2008. So a lot of people really had built up this mindset that they wanted to protect on the downside. Hey, that bet finally paid off, and thank goodness, because that was a losing proposition for quite a while there. So if you look at VIX, that's the highest level or biggest spike since December of last year now. And if you dig a little bit deeper, by the way, I don't know if you're into this stuff, if you dig into the call options, you got a ton of call options on the VIX futures coming up for this Friday and then next Wednesday. Just, I don't know how much you look at that, but traders are basically betting that Trump is just going to walk away 100%. Right? Or that's the level of fear in the markets, is that, oh my God, this guy, he's already threatening to put tariffs on there. The Chinese negotiators are going to come over. He's not going to show up. Trump's just going to be like, I'm done. I'm not dealing with you guys. So if you look at the call options in that fear index there, you've got traders essentially pricing in that come Friday, we're walking away from the trade deal altogether. Other scenarios could be that we extend the deadline. The deadline's Friday. We extend the deadline, we don't put the 25% tariffs on the ones that currently have 10%, and all continues. Negotiations continue. That's at the bottom of the list. Like, nobody expects President Trump, who's, he's known for being pretty tough, to all of a sudden just soften up. There'd have to be some major progress made there. And the third thing that we're traders are pricing in, or at least concerned about, is Friday starts a new war, right? Essentially a new trade war where 25% tariffs eventually go on every single thing coming out of China. We'll see. I don't try to guess or anything, I guess, but we'll see what happens. That's just giving you an idea of what actual money is being bet on right now. So I thought I'd point that out. All right, let's take a look. Look at it. By the way, a couple other things. It's the third busiest week for earnings. That's barely made any headlines. I'll cover some of the earnings in there for you. So far this week, since they won't talk about it on TV, 155 names have reported earnings. 61% have beat on earnings. We're real low, 59% beat on revenue. So a little weak towards the tail end of the bulk of earnings season there, if that's something you're interested in. We got the charts up here. Let's go over to some of the sectors. We take a look at the sectors here. Retail getting hit today. I'm going to zoom out. Let's go a year. So retail coming back into the low end of this range here, just refusing to get anything done. And that's because you got a lot of retailers that have moved away from Chinese exports. It's not like an overnight transition, but a lot of people that are starting to become less reliant on China there overall. You've got Dollar General in that space. Dollar General only lost 1.7% today. Compare that to some of the other retail stocks, and you go real quick, well, they're doing something in there to stay away from this whole Chinese mess. Actually, what they did is when they report earnings, they said, hey, our guidance going forward, we're already pretending the 25% tariffs are in place. And so investors, hey, that's a good idea, right? Price it all in. Worst case, we'll be surprised. So that could be a stock if this tariff thing doesn't pan out to be as crazy as everybody's making it seem, and we get back to negotiating in a meaningful way. That could be a stock that does really well because they've already priced in 25% tariffs all around. You know who didn't, by the way? Just a quick look. Dollar Tree. Dollar Tree hasn't done that. So they're down 3%. You could see the difference there. Basically, today was a great day to pull up any stock and go, okay, something's going on here. You guys either have a lot of exposure to Chinese revenues or get a lot of your revenues from importing Chinese goods or something, right? So it was a good day to really tell what's going on there. We'll take a look here. Oil pulled back again on the day. Still stuck at the 50-day moving average. What's the deal with this chart? Can I do like this thing here? Yeah, zoom out a little bit. So very much still in an uptrend, looking pretty good. Interestingly, energy is your, how do you say it, most oversold sector, if that's how you want to look at it, at least in the short term here. That has sold off the most, at least in the shortest amount of time, meaning it's also furthest away from its moving averages. That's how we track everything here. Like, how far away, like Disney, did we get from moving averages? How far to the downside? So energy is one of the more, you would say, oversold areas of the market. Materials is the other area. XLB is one way you could see that. Not quite as bad as energy, but still pulling back there in the short term. So you got oil a little bit lower on the day as well. There's some of the obvious ones in there. Semiconductors carrying over from yesterday, erasing all of the, now that's not a positive day, by the way. Look, let's go in here. If you're one of our customers here, you see green, but that was still a down day. There's still a gap to account for there. By the way, I'm going to get in one little plug for this here. Go into the video library, sort by wine and wealth right here in the dojo, and go down and check out these candlesticks classes. Very important here, especially through earnings season and all of this mess through the trade war thing. You're going to see a lot of messed up charts, and these candlesticks classes will really help you understand that if you're interested. no big deal. Back to semiconductors, erased all of yesterday's attempt to close into positive territory, finished down another 2.25%. KLA 10 core was a big one there, clack, with earnings out, and also obviously, part of the Chinese issue there. So down 6%. Basically all of them took a little bit of a hit today. Healthcare was all over the place, man. So yesterday we got the news out of that fund manager that said some of these stocks were overdone. So a complete reversal. I even said here on the show, well, for those of you that wanted a pullback, it looks like we're not going to get it, me being one of them. And so today erased all of that, right? Complete reversal, which means the pullback is back on, right? You expect this thing to pull back for you. So hopefully, we'll see. Well, hopefully that can give us that. Individual stocks, and then I'll take some of your questions. Anheuser-Busch, BUD is the ticker symbol, reported earnings. I believe they missed on earnings. Was it 6 cents? They've missed on earnings 11 out of the last 15 quarters, by the way. They're not good at this game. You know how Netflix seems to never miss? Apple never misses. Budweiser always misses. They haven't figured it out. They've even announced a potential IPO in Asia, or an Asian IPO that they want to do over there, basically to take in more money so they can do more acquisitions. So they're not concerned about debt because they do have a decent amount of debt. Hertz, complete reversal from yesterday. They reported earnings after hours. Everything was positive, even into the open, before the open, and then all throughout the day, a quick sell-off there. They lose money, by the way, so they just lost less than they expected. You know how many times I've said that this month already? I'm going to say it another one in a minute here. So they lost 36 cents less than expected. Revenue was basically in line there. Just overall weakness. That's a tough stock. That's a really tough stock. AIG, that's your best performer in the S&P today. That was up almost 7%. All earnings were 50 cents better than expected. Really good, right? Can't complain there. You know AIG, the insurance group. They made a profit in their underwriting division. That was the focus. I believe this was the stock. Made a profit in their underwriting division. That was for the first time in a couple of years, I believe. So AIG, much deserved 7% gain there. I put in the scroller below. Just see Ferrari. Do you know Ferrari's a public company? This is a tough concept here. Ferrari up 4%, almost back to new highs. Earnings were higher 22%. I'm like, why? What are they doing? Are they charging more for their cars? Already ridiculous. Or did they make more cars? Because that's not a good thing. If they make more cars, they're less exclusive, right? They're less sort of, I gotta have one. If everybody has one, what do you care? So there's that tug of war there. Anyways, their Portofino, I have no idea. I'm not a Ferrari guy. So Portofino, that Portofino car line was the reason for the 22% jump in net profits. Ferrari killing it. So here's a relatively strong stock compared to the overall markets today. Mosaic, if you like waterfall drops, take a look at that one. Mosaic beat on earnings, but they lowered their guidance going forwards. Thing just plummets to new lows. Look at how you got a normal downtrend, right? This goes back to the Tesla days when we went over that. You got a normal downtrend, then what happens? All of a sudden, it starts falling off a cliff. And if you throw a rock off a cliff, it goes faster and faster and faster and faster, and then boom, hits something, right? So anyways, you got Mosaic just selling off there in a waterfall kind of way. I know some of you like that. Boeing finally breaks through this support area here, and what happens? You get an aggressive down day. What is that? Why would it break below this low and then be so aggressive with so much volume to the downside? Those are your stop losses. So you have investors. I've been mentioning the retail traders. Even yesterday, TD Ameritrade reported retail traders keep buying this low. They keep seeing that low. They love it. They buy it up. What do retail traders do? They put stop losses in. They put it in the platform, meaning if the stock goes below this point right there, they tell the computer, I want you to sell my position. I don't want to be in it any further. So right when we break through, if you look at it intraday, you get those stop losses coming in, and you could tell, all right, that's everybody or a lot of people bailing on this position here that was working, or at least trying to work over the last few months. So Boeing breaking through support there in the short term. All right, Lyft. Holy cow. So Lyft's out with their earnings. They beat on earnings, right? Fast revenue growth, everything, they're growing like hotcakes there. Beat on revenue technically. They expect a $216 million loss for the next quarter. That's not like groundbreaking news, by the way. That's right in line with what everybody was expecting. Oh no, they have a $216 million loss, $280 million. That's why it's in line. I was going to say that's a lot less. $200 million, $80 loss for the next $280 million. Yeah, is the loss for the next quarter. They expect to lose over $1 billion this year alone. Now I get it. I read the earnings report. 20.5 million new riders, right, or existing riders or bookings. Okay. They're going to lose $1 billion+ this year. How long would you invest in a company losing that kind of money? Think, we did a whole video on this. You can look it up, the Lyft IPO. You've got a company that's stuck, right? And Uber goes public on Thursday. They're stuck as well. Uber came out with their numbers today. They go public on Thursday. Their losses are growing, so they're losing more and more. Overall revenue, slowing. Does that make for a good investment? Just ask yourself that. Those are the numbers that came out, or the report that came out today. But how long do you think investors will stick with that? I get it. There's Amazon. Investors stuck with Amazon, making their 0.005% profit margin for all those years. But how long do you stick with these companies when they're clearly showing you they are making less and they're losing more? How do you right that ship? The only way you right that ship is to take more from the drivers. You got to be careful there, though. What if you take more from the drivers and they go, forget it, I'm not driving. I'll go do something else. I'll rent out my bedroom on Airbnb. All right, let's do that, right? So they got a real problem there. I wish them the best. I don't have like any positions in that. I won't participate, but real problem. And that all stems to the media hype, right? Look at how much excitement there is around all these stocks, and you go, okay, should I be excited? I don't know. Well, I think you know where I stand. All right, anyways, there's no economic news tomorrow, by the way. That's a big one. We've got nothing else to focus on tomorrow. Couple earnings in there. I'll go over them in a second. But we have nothing else to focus on tomorrow besides what's going on with the trade war. So you can really hope for a tweet by Mr. Trump before he goes to bed tonight. Maybe that'll help. Maybe there's something good there. I would actually be on the lookout for a tweet that tries to slow this market. I don't know that that's going to happen, but you got to expect somebody's going to say something to try to boost this market tomorrow. Anyways, you got Coty reporting earnings tomorrow. They're the makeup guys. They make makeup. McKesson coming out, Disney coming out, and Kraft Heinz restating their earnings. They're going to report earnings, but really a restatement there. So there you go. If you like pullbacks, right? If you're the kind of person that's like, man, I missed the entire rally. I sold in December and I missed the whole rally. I'm looking for a spot to get in. We're kind of working on it, right? So a lot of people, I know a lot of our customers, they get so excited when the markets pull back, right? Because think about it. Unless you're currently retired, you kind of want the discount, right? So it's so funny to see these emails people send me, all of our customers. They're like, come on down, let's bring it down. How much further are we going? Well, the short story is looking good there. If you like pullbacks, you got that. Now, in the S&P 500, you have almost half. Just a couple months ago, 97% or 90, I went through this with our customers, 97% of all stocks were above their 50-day moving average and trending higher. You know what the number is as of today? 52. 52% of all S&P stocks. That means half of the S&P is pulled back in a way that basically just stopped its uptrend. So if you like that sort of thing, there you go. Okay, any questions? There you go. Pullback. You guys loving the pullback. Kirk says, I love Trump playing hardball with China. I like it for what it's doing with the markets. I think the markets need a little excitement over the summer. Remember, sell in May and go away, right? Maybe if it'll keep it from getting quiet over the summer, and we'll have something to talk about, you know? I'm not even going to try to say your name there. I fully support the president's tariff play. The Fed used to be funded by tariffs, not income tax. You know what's surprising, too, is there's a lot of bipartisan support. You even got Chuck Schumer going as far as tweeting, go for it, Mr. President. Let's fight back, play hardball. So when you've got both sides not really agreeing, but at least temporarily putting the whole Mueller report thing to the side, when you've got them just kind of focused in on this and supporting you, that's a good thing. The only person we got to get on board is Larry Kudlow. I don't know where he was getting his news, but he was a little off. Interesting question for you, Dustin. Are you guys seeing an influx in younger investors with the likes of Acorns and Robinhoods popping onto the scene? How's that affecting markets? We generally attract the younger investor, so I can't attribute that to one of those companies there. But I just think it's because people are watching on YouTube. I don't know. I mean, I know it affects ETFs. Not us. We use stocks and ETFs as well. But a lot of those companies use only ETFs. The robo-advisors, only ETFs. So imagine if all this money is going into only ETFs. what happens when the markets start to fall? Those ETFs really start to struggle. That's where I see we get more interaction from people as far as wanting to join us, because people panic, and sometimes the right answer is just say stay the course, but it's like that's when people panic because they don't really know what they're doing, what they're investing in. And sneaky little plug here, that's why we teach, right? That's why I'm always trying to teach more and new stuff in our Thursday classes. Yep. Thoughts on oil? Yeah, that's going to be a tough one, right? This trade war thing's an issue there. You got the Iranian sanctions officially in full swing there. No waivers being put into place. Venezuela, Lord knows what's going on over there. So the pullback in oil, totally acceptable. You had an amazing little rally there. So although it's a little extended in the short term, I like it. I have no issues with oil continuing to pull back, both from an investment standpoint, but also from a price at the pump standpoint. Come on, man. You're just killing me there. All right, let's see here. Yeah, Disney's going to be one of the bigger earnings tomorrow. It's after the close. Yeah, Disney's after the close tomorrow. Let's see what we can find here. Disney historically does pretty good on earnings. They beat on earnings almost every time, 80% of the time. Revenues are a little bit mixed. We're looking for earnings per share, $1.57. Revenues, let's see, where are we at here? Oh, that's tomorrow. I got you. Okay, cool. Actually, a pretty volatile stock. And you know what? I don't know if you follow what's happened with Disney lately. That sharp little rally up there, that could be just maybe a little mixed earnings report. Could be just the recipe for people that are looking for that pullback. However, historically, the stock doesn't move a whole lot. You're talking about less than 0.25% on average for earnings day there. Movement, right? So it could gap down 1 or 2% and then finish, up a half or whatever. But that one's typically not, at least lately, hasn't been all that active. Last earnings report, it closed down 1%. The one before that, it closed up 1.72%. So it's like, it's a mixed bag there, in my opinion. If you own it, I wouldn't see any reason why you do anything. But if you're looking to buy it, of course, you hope it takes a little bit of a break. A lot of positive news behind that stock right now. So we'll see. We'll see. We'll cover it. Let's see. Nice. Oh, a little compliment for Josh Scanlon over there. Yeah, he's supposed to be coming down, and we're supposed to be doing something together here. I don't know. That's what he said. I haven't heard from him, though. Somebody have to give him some grief on that one. Ashish says, thank you for all the work you put in. I appreciate it, man. Thanks for watching. Thanks for watching. This is just scratches the surface as far as what we kind of do for our customers. Thursday, I'm looking forward to that class, too, by the way, because that's one where I could, really kind of dive in a little bit. Yep. Nice. Cool. Yep. Good robo-advisors out there. You guys are mentioning a couple of them there. If you're interested in that, those are two great companies. Actually getting to know one of them a little bit there. That's probably all I should and will say. But you got to know what you're doing. The bottom line is either say you're going to go with it and you're not going to do anything. You're just going to dive in. You're going to be consistent with it. Or, at least do a little research there, because I can tell you a lot of people wrongfully leave those companies and they come and they use us because they're like, I want you to teach me, Dustin, all this stuff. But in reality, they sort of bash them. And I don't like that. I don't do like videos to bash people, but just understand what you're getting. That's all it is, like anything else. Let them sell in May. I'll keep buying while they go away. I love it. Yep. I love it. Yeah. Well, hopefully Josh does make it down here. Yep. Yeah, as far as what we do, everything's right on our homepage. Actually thinking about doing a little bit of a refresh to all of that, so we'll see. In the meantime, I won't take any more of your time. I'll wrap it up here. So like I said, tomorrow you got earnings. Just really Disney's going to be the main focus in the afternoon. We'll cover that. We'll be here to do it. I appreciate you watching. If I help you in some way, maybe you'll hit the subscribe button or check us out at jazzwealth.com. Maybe you see something you like there. In either case, I'll be back tomorrow to keep helping you guys, keep teaching you guys, and hopefully we'll all keep growing together. So enjoy. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.